All right, so here with us now to talk more about the changes we should all expect this tax season is David Peters, founder and owner of David Peters Financial Group and Peters Tax Preparation and Consulting. Peter, it's your time to shine, starting today officially. Millions of taxpayers, though, will be surprised when they see smaller tax refunds this year. So tell us a little bit more in detail about the main reasons for that.
Well, a lot of the incentives that we saw in the last couple of years related to COVID have gone back to where they were sort of pre-pandemic. So the child tax credit was worth $3,000 or $3,600. This year, it's only worth $2,000. We also saw a drop in the dependent care credit, so that's not worth as much this year. We're going back to pre-pandemic levels. Also, the credit for not receiving a stimulus check, that one is also gone as well. So the combination of all of these things is that for a lot of people, that's going to end up being a lower refund.
So let's talk about the child tax credits, which many families count on. How big of a difference will the smaller credit make for families? And is there anything people can actually do to make up for that difference?
Yeah, so the difference is going to be we had a credit last year that was worth either $3,000 or $3,600, depending on the age of the child. This year, each child is only worth $2,000. So it's a lesser credit. That means that your refund is going to go down either $1,000 or $1,600, depending on the credit that you got last year. In terms of making up for it, there are still some moves on the board, even though the tax year is over. One of the big ones is that you can still make a contribution to an IRA and count it for 2022. You can do that up until the due date of the tax return. Same thing with health savings accounts.
And let's talk about deductions for charitable gifts, which is something a lot of people utilize, but that has changed as well.
Yeah, that's correct. So the last couple of years, we've had the ability to take a charitable contribution deduction, even though we were actually taking a standard deduction on the tax return. So that is no longer allowed. That was something that was in place, again, kind of during COVID. And so at this point, unless you're itemizing your deductions, you can't take that deduction anymore.
I see. So it kind of went back and forth a bit. So we know the IRS announced new tax brackets because of inflation as well. But will that necessarily have an impact at all on tax filers for this year?
Not really, from the standpoint that the really big increases that we saw in the standard deduction, those are going to be coming in 2023. Now, that being said, the standard deduction did go up, but I think that in a lot of ways, for many people, that may actually hurt them because, if they got a big pay raise or something like that, you're not going to be able to take advantage of the standard deduction sort of keeping up. As the graphic you see on the screen there, I mean, it's you see the big jump in 2023. So we'll see that on next year's return.
Okay, so then in that case, what do people need to do to prepare for that next year?
So I think that the thing to remember is that if you plan now, you're going to be in better shape than if you wait until the tax year is over. The moves on the board are just a whole lot less. So what I would do is, make sure that you're taking advantage of the deductions that are available to you. If you have a side gig, make sure that you're taking all the deductions related to that gig that you can. Anything that is ordinary, necessary, and reasonable generally is going to be deductible. Also making sure that you're maxing out retirement accounts. There are a lot of incentives right now for retirement accounts and the contributions that you give to be able to lessen your gross income and then also make your taxable income smaller. So that means that you're going to be paying less in taxes.
All right, well, I guess I got to get started on all this. I have been avoiding thinking about it, but better to do it early, I think. All right, David Peters, founder and owner of David Peters Financial Group. Thank you so much for joining us today on the first day of tax season. Appreciate your time. We'll be right back.